Alright guys, what's up? We are going to be taking a look at what we can learn from today. So, yeah, about to jump into it. Looks like today was quite a crazy day. Wow. Well, this is Asia session. What am I saying? We ended up going and halfway filling the overnight gap, it looks like. There's a lot we're going to have to remove here, so actually I want to look at the 1 hour Venom model. Did that end up playing out? Because I think it did. Remember we were talking about this in the pre-market today, where we were like, this 1 hour Venom model might end up being, being low of the week here. And we had London High here. Interestingly, London High was a really good draw on liquidity because it was perfectly at the CE of the overnight gap, which is just crazy. Let's see if we have an SMT with YM with that low. I don't think there's SMT, but that's okay. So there must have been SMT with this low probably, if I had to guess. And then all of a sudden, once again, remember the 1 hour Venom, drag this over. We still ended up using this 1 hour Venom, just digging into the Venom candle a little bit more. And yeah, I think that this previous week's low SMT held. Actually, it must have, because if we're doing a higher low, then ES still had the lower low. So yeah, this still held. The 1 hour outside bar so I was looking at this in the pre-market as well. The 1 hour outside bar right here brought us up to the next gap, but we didn't make it past that. So interesting. But anyway, yeah, you can see this Venom model was actually the low, which is exactly what I said was possible, right? So we're gonna drag this over here. And yeah, once again, Venom model is what you'll see basically sell side, like a fair value gap on the sell side, a fair value gap on the buy side. So these are called the fangs, and then you'll just kind of see like a purge of liquidity. It'll be like an order block, and so it's this like basically just a BPR, and you can see that is a really nice entry. So that's the first thing I'm going to screenshot today. And we're on our way to filling the RTH gap here. So pretty cool. Once again, London was a very nice strong liquidity because it was perfectly overlapped with the overnight gap midpoint. So okay, let's go ahead and screenshot all this. And we got that internal sweep, which is important, right? So the market actually wasn't ready to go higher yet because there'd been no real internal sweep, and we finally get it here. Now, I was aware that we hadn't had an internal sweep, but I thought maybe we didn't need it, but clearly we did. So let's go ahead and mark out this sweep here. Boom, boom. So yeah. Oh no, didn't mean to do that. But yeah, there's that internal sweep there. And yeah, pretty nice. And then yeah, we deliver to what? To go start to fill this overnight gap. You can see we go halfway. So, and what's interesting, I think this is actually super precise actually, is I think we actually formed the high here at essentially almost exactly the first quarter of the RTH gap. I could be wrong, but I'm going to look at that real quick. So we got a folder for today? We do. So 1 hour, whoops, 1 hour Venom model. Oh, we should probably take the screenshot where it includes the actual, it's fine. Model held could held. Okay, so yeah, I do want to take a look at these quarters of the RTH gap. So here we have the open of the overnight gap and then the close prior to the overnight gap. So we have this marked out correctly. Now we can mark out quarters, and I have a suspicion that this right here was the first quarter. Let me check. Yep, see that? You can see that we went to the RTH 0.25 and we just got rejected. So sometimes when the RTH gap is this wide, you'll see something like this where we only go to the 0.25 just because of this, just because of how wide it is. So 0.75, and then yeah, here we have only the 0.25. This was all the market made it to before, well, yeah, right after market open, which conveniently I caught a piece of that, which was nice. But anyway, yeah, that is basically where the market got rejected here. And we had a really nice internal sweep here. I'm surprised there wasn't SMT with that low, but hey, what can I say? So yeah, we'll mark out that we got rejected at this 0.25 of the RTH gap. I think that's kind of fascinating. And that, you know, that these quarters and the eighths of the RTH gap are all very sensitive. So I think initially this first run up actually probably went to the eighth. Actually, now I'm curious. So run up after market open only took us to the 0.25. Yeah, my guess is this first leg up in the pre-market only took us to the quarter, and yeah, that is the case, right? So then eventually, finally, we get the move up to these highs. We had relatively equal highs, or maybe perfectly equal highs. I don't know. I think it was London equal highs. I can't remember, but eventually we did go take them, and the main reason why we didn't go up till later is because there's no internal sweep of liquidity until, well, until 10:30. So why did we not go higher until later? Why did we not go higher until later? Because no internal sweep of liquidity. So yeah, and then you can see post 10 a.m. we finally start going up. This is your classic like 11 a.m. reversal type thing. I mean, this is something that there's like 10 a.m. reversals and there's 11 a.m. reversals. I don't know, just from what I've seen in my back testing. And then yeah, you can see the midpoint was the next draw, and I think London high was right with that. You can use, yeah, I know. So many people keep telling me that, and the reason I don't is just because there's some reason why I can't. I think it's because yeah, because I need to save it to my folder, and I can't. I know, but I have to save it to my folder. I know I can do that, but if I don't do it this way, then you can see that if I don't do it this way, then I don't have the button to click save and then save it to a folder. So that's why. So, yeah, the fact London was just perfectly with the RTH high was just beautiful. I mean the RTH midpoint. These lining up together, especially with this being like relatively equal highs too, bro. Like that is just such a yeah, I know it's kind of sucky and stupid, but it is what it is. But the fact that these were the same is just insane. Did I screenshot this whole thing yet? I forgot. I forgot. Hold on, let me check to see if I screenshotted it. Hey, what up, Javier? How's it going, bro? Just getting some good back testing in. Did I screenshot the sweep? I don't think I did. Yeah. So we got a screenshot. So why do we kind of get rejected by the 0.25, the RTH gap, and then go fill it? Well, honestly, because there's been no internal sweep of liquidity. Finally, we get this internal sweep of liquidity, and then we go to our true drawn liquidity, which is these London equal highs, perfectly resting at the RTH midpoint. So let's go ahead and screenshot all this. Bang. Bang. So yeah. Why did we not go higher till later? No internal sweep. And then you guys can see that after finally we take this internal liquidity, then finally we go to our true drawn liquidity, which was this very obvious London equal highs right at the midpoint of the overnight gap. So what was the price for the 0.25 RTH? 24,651. What's up, Priff? How's it going, bro? But yeah, this is just such a this is such a nice drawn liquidity. Like if you like the market down here has this previous month's low SMT. When we get down here, you better bet I'm looking for longs because I know the London equal high. It's equal highs and it's the midpoint of the overnight gap. Like, bro, that's just so perfect. You can't make it up. It's like we're obviously gonna go there, right? London, relatively equal highs, and RTH midpoint. Pretty good draw on liquidity, huh? And yeah, obviously that's where we went next, right? You streaming tomorrow morning? Heck yeah, bro. Every day, 8:30 to 11:10 Eastern. At least sometimes I'm a little bit late, but 8:30 to 11:10 Eastern, plus or minus 30 minutes. But I'll get on the stream before 9 usually. But yeah, I'll be here tomorrow. I have a level 24,650. Guess what it was from? Inside bar, bro. Did you take it off an inside bar? But yeah, like we come down here, we still have this SMT, and I see this liquidity sweep. I know we're below all the true opens. I'm like, come on. We're like, if I was trading post 10:30, I'd be looking for longs after we sweep this low. You could probably have caught a pretty high time frame trade. Yeah, could this draw on liquidity not have been more obvious? I think 11 today was a really good day to trade like post 10:30 because you can see that after 10:30 we really start to get this move towards our true draw on liquidity, and wow, that was just beautiful. Like I bet you actually we probably had a 2022 model around 1050 going into the macro. We're gonna have to check. Hold on, let's check actually. It was an inside bar. I knew it, bro. You're gonna have to screenshot it and show me. I want to take a look at it. But yeah, guys. London equal highs or relatively equal highs, and RTH midpoint. A little too good to be true, huh? So yeah, I'd be looking for that target. This right after 10:30. And so, yeah, we get this move down, finally take out, essentially, I think this is probably New York AM low, right? Session liquidity. Or low of day. No. This is just low of day. So, we sweep out low of the day. Wow, what is this, guys? It's almost like The 2022 model still works. What is this? Liquidity sweep, break of structure, fair value gap. And then we go to our drawn liquidity right at the start of the macro. Bro, come on. Come on, bro. Trading doesn't get more simple than this. Look. Fair value gap, liquidity sweep. I mean, you might not think that's a break of structure, but if I go to the 1 minute, it's pretty clearly a break of structure. Yeah. Boom. Liquidity sweep, break of structure, fair value gap. This is... Bro, the 2022 model doesn't not work anymore. It always works. It always does. You don't have to take it, though. That's the thing. You can understand the 2022 model, be aware of it, and then just say, okay, I'm going to trade to get on side with it once I see it in the chart. That's kind of what I do, because I'm kind of... Sometimes it's kind of like a... Sometimes the 2022 model can be a little hard unless you have like a really advanced understanding of when it's going to work, because it's obviously hard to trade for value gaps. I mean, it just is. I don't think it's easy. That's why inversion for value gaps are so popular, because usually a lot of the time fair value gaps get disrespected, but yeah, this is just you just have to understand when a fair value gap's likely to get respected. It's like when it's taken a really important low. In this case, this was low of the day, and then liquidity sweep, and then 2022 gap. And also, it definitely helps to know we're kind of delivering from this venom candle. And so yeah, then at this point, I'd be like, okay, I want to see London equalize with the RTH midpoint. I wonder how much of an RR trade this was, honestly. Let's check. Let us check. How much RR do we get? And also, you induce this low, right? So that's the other nice thing about it. But yeah, like, this is why, like, I mean, I wouldn't take this, but what I'm saying, like, is you use this to get on side with the market. Understand what's a likely 2022 model, and then trade to get on side with it, right? And then we had such an obvious drawn liquidity here. And then all these highs are kind of low resistance. All these highs are low resistance. All these highs are low resistance. You can see that right here. Bang. And then bang. And then bang. So yeah, what a beautiful day post 11 a.m. honestly. I mean, yeah. And also going into the macro as well. It was better marked out on the 2 minute, but it doesn't really matter. Anyway, just a beautiful drawn liquidity. And then let's just mark out all these as LRLR. You can just see them on the other side of the curve there, how nicely they're LRLR, right? LRLR there, LRLR there, LRLR here. It's like, guys, there you go, bang. We run all the way up to the RTH midpoint. Bet. I'll take a look at that in a second. Okay. So yeah, liquidity sweep. Let's actually mark out the break structure. Once again, it's not about break structure. It's about displacement. So clearly we have displacement here. And also, I bet you this was probably OTE. I bet you it was probably right at 0.705. Right? So we're going to need to make a nickname for sniping the 0.705 of a 2022 model. Because, like I say, guys, there's really 3 different kinds of 2022 models. There's the one where you come down to OTE perfectly, or the 0.705. There's the one where you perfectly tap equilibrium. And then there's the one where you kind of just have displacement and it doesn't even come to equilibrium. So there's really 3 different kinds of 2022 models. No one talks about that because no one really understands the 2022 model in the first place. But anyway, this is that first kind, and we're gonna have to make a name for it because I want to be able to distinguish between them. So first, let's just mark this out as a 2022 model first, and then we're going to also mark it out as a specific kind of 2022 model. So this was right at 1050. Wow. Wait, dude, hold on. That no, bro. We gotta talk about the macro. Actually, I'm sorry. This is too perfect, bro. 1050, 1110. Wow, macros aren't real. T trades. Macros aren't real. Then how did that happen? We went right to our drawn liquidity as well. That's a little weird. Macros aren't. It's like, wait, what? Macros aren't real? Pretty sure we deliver right to our drawn liquidity within a 2022 model during the macro. Bro, I mean, I literally. So, I cannot believe T-Trade said that, bro. So stupid. If it's not obvious enough, macros are real. It is so obvious. There you go. Macro, and then we go higher. It's crazy, bro. That is so sick. Let's actually show different versions of this because realistically, right, if I was taking this for real as a 2022 model, I would just target this L or LR. So, yeah. Boom, boom, boom. Let's just target this LRLR here. It's a 4R trade. Like, guys, that's pretty nice. And obviously, you can align time and price better and then get a better entry. '22 model on the 1 minute. It's more like a 2022 model on the 2 minute if we're being completely real, but it's whatever. It's besides the point. All right, guys. So we're gonna need to make a name for the version of the 2022 model where you tap 0.705 or OTE or whatever. So I'm gonna try and make a name for that actually right now. 1 minute, number 2. Okay, so yeah, let's make a name for this. I'm gonna ask ChatGPT for advice. If any of you guys have advice for me on what to name this version of the 2022 model where you perfectly tap the 0.705, put the suggestions in the comments. So I'm gonna ask ChatGPT. Okay, I'm gonna show you my screen. I already have a sniper model. No, we can't name it Venom. I don't know, bro. Maybe the 2022. Man, I don't want to have to name this right now. I'm just gonna call it point or I'm just gonna call it 2022 OTE entry for now because I don't know the name for it. So yeah, there's that 0.705 actually. I will think of a better name eventually, but right now, that's what I'm calling it. And so the fun thing is, like I was saying, like if you were to take this, just like like as a very aggressive version of this, where you just soup it and then to see if you can do it with a type stop loss, then you could get something really, really nice, like probably like a 20R. Not saying that I would do this anytime soon. See you tomorrow morning. Good night. Sounds good, bro. Peace out. See you then, bro. See you then. Get some good sleep. Get some sleep. So yeah, boom. Into that low. Bang. And then we do displace all the way up to those highs. So once again, I like backtesting the possible, so you guys might hate on it, but I don't care. I'm gonna backtest it because I think it's cool, because it's possible, right? Like we have one unequal highs, perfectly aligned. This is like such an obvious strong liquidity. Bang. But once again, I'm more or less just like using this for bias, honestly. Like I just like to know where the market's going at all times. If I can read this and I can say, okay, this is probably a 2022.705 entry, I could look for a reaction off of it and then trade to get on side with it. I don't have to take this trade. It's just I like to know, kind of in the back of my mind, like what it's actually doing and why it's doing, and then I can get on side with it because I already know what it's doing. That's why. That's more or less why I'm backtesting trades like this. Not because I'm saying I'm going to take it, but because it's helpful, right? So 1051, 2022. I'm just going to call it the OTE 0.705. I don't know what to call it. I'll just call it the OTE entry. Yeah, that's fine. Okay, once again, I just wanted to kind of like just show that. But the cool thing is now, right, we can look and see, okay, is there a trade within here? Once again, this is more or less like more of a 2-minute 2022 model in all honesty. I really like the displacement candle here. And so I would more or less consider this more of a 2-minute 2022 model. And then from here, knowing this is a 2022 model, knowing this is OTE, knowing we're probably inducing this low, I would go in on the lower time frame and try and find a lower time frame entry. So it's a 2-minute gap within the macro. So let's also mark this out as a 2-minute version of this trade here. Hold on. $10.50 to $11.10 macro. So yeah. So let's mark out the 2-minute version of this trade. That's a 5R. That's actually so nice. Boom. There you go. Okay. So 1050. 1050. Oh no. 1050 2022 model on the 2-minute. And then what I call what I call this, where you align time frames. So you find a 2022 gap and then you align it with a lower time frame, like for instance like a 15 or a 5 second. I call this the 2022 plus. So we go in the lower time frame. Well, we have inducement. We actually have double inducement. So this induced this low and then this low, and then bang. Actually, I like this best. Boom. Inducement. You can just clearly tell that's an inducement. Once again, right at 0.705, right in this 2022 gap. So from here, I am looking for basically, well, here's the issue, right? The change of state, the 15-second, we do not get a good close. Let's see if there's a good 5-second. There's really not a good 5 or 15-second. But you know what could have been fine is, oh man, that was almost an outside bar. This would be a really cool outside bar to take if this was an outside bar, but it's not. Almost is. But you see how you align time and price? You get really, really precise entries here. I don't mind this as the entry of this 5-second change in state here. Yeah, you could have entered on the 5-second change state retest here. Once again, that's also completely valid for a 2022 plus, but that's more risky. I prefer this, and I would go like this. 5-second CSD off of this. Pretty clear at this point that time and price are aligned, and we're gonna go run all this liquidity. So I would go like this, like this. And yes, I do think that this is a possible trade, honestly. I really do. And clearly we've induced this low. 5-second change in state. All this is just super, super trend liney. Bang. And then you can just tell that we're gonna run higher. Once again, this is gonna be rocket fuel, guys. This is gonna be absolutely rocket fuel for us to go higher. And you would want to see a lot of absorption here and aggression here. So that's something we could look as well for. You see how we just aligned time and price? And then bang. All the way up to this LRLR. And then honestly take profit at the end of this, so probably like here, right? That'd be final TP. Whoops. And you could see how just clean that was, right? Just what a beautiful alignment of time and price, honestly. And yeah, let's check for absorption and aggression here. But you see how we kind of just combined two different LRLR runs into one by just aligning time and price. Bang, bang, bang. Yeah, so this is where it becomes clear. We're going to go higher. This is where I would take it. Bang. You get in on that candle. Probably with two cons. And you get in for the whole macro. The whole macro. That is just so nice. Oh my gosh. Let's check for absorption. Like, guys, this is just such a beautiful example of how you align time and price. The liquidity sweep on the high time frame, breaker structure for value gap, and then liquidity sweep, breaker structure for value gap on the low time frame, LRL on the low time frame, LRL on the high time frame. I know it's not super easy, as easy as it looks, but the fact it's possible is just so cool to me. What up, Motion? How's it going, bro? This is just the perfect example of how precise the markets can get, and I know people are gonna be like, "Well, Jake, this is so hindsight, bro." It doesn't matter because the fact that it happened means someone's took this trade, and means it's possible, which means I don't give a crap, right? I'm studying the market, letting the market be my teacher, and this is what's possible in the market, right? When you align a low time frame liquidity run with a high time frame liquidity run, and then we ended up continuing even higher. Anyway, so I call this 2022 plus, where you kind of just you find the 2022 model, but then you wait for a low time frame confirmation with a change in state delivery, and then you just get the whole move. So it's actually two different 2022 models on top of each other, but that's besides the point. So, okay. 1057, 2022 plus. 2 minute. This is actually kind of weird. 2 minute. I lined the 2 minute with the 5 second, but it's whatever. Because the 15 second was kind of weird. Okay, save that. All right, so let's go ahead and try and find a more realistic trade. I just like learning from everything, but that's obviously not a realistic trade. I just like looking at it. I think a realistic trade would probably somewhere on the 1 minute. We probably got some kind of entry here on the 1 minute, if I had to guess, or maybe the 30 second. But once again, I would have a lot of conviction that this is gonna go higher. See, this is why it's tricky, because there's no real clear, like, this could have been an inversion for value gap, closed way too high, right? You see why this is just kind of like, sometimes it's not so straightforward. Like, people are like, oh, like, I just gonna wait for the inversion. Like, what happens when it doesn't inverse, bro? Now, then again, this one does inverse, and I really like this. So I would say this as an inversion for value gap on the 30 second. Definitely valid here. And maybe you take this. Let's see if it's a 1 minute gap, just to check. Yeah, so this is we would want to see this whole 1 minute gap inverse, and I'm gonna mark this out kind of like implied gap, because if I want to include this wick here. So this is my version of implied, not ICTs. Implied, kind of implied. Next, let's just call it an IPG. I don't want to. So then bang. Delivering from this super stupidly obvious 2022 model, right? This is why I would have so much conviction. So obviously I probably would not get that low time frame entry, but how could I get in? Probably just this regular inversion right here, right? This is just, and I don't know about that candle, but this candle, very clearly obvious we're gonna go higher. So yeah, I just go like this. And only thing is, you do have this external gap, but if you have conviction in this L or R, it really doesn't matter. And well, with it being the macro, honestly, I probably would. Right, so I maybe go something like this. Yeah, it's a little scary. I don't know. We're just journaling. It's okay. I maybe wouldn't take it. Well, I don't know, but I do think it's definitely decent. I don't know if I would take it, but I'm marking it, right? Because I don't know. With this external gap, it makes it super tricky, and so I guess you'd have to go break even here. Yeah, I think honestly I probably would not take this because of the external gap. But if you did have conviction that that external gap was gonna break, then you could try it. And yeah, then we clearly went up after that. Oh yeah, I was gonna mark this as break even, right? So yeah, you would have to go break even at this high. Like, even though you don't really want to, obviously, you kind of do because there's an external gap there. So I'm checking the DM right after this up here. So yeah, that's more of a realistic trade. Once again, kind of a scary trade because you obviously have to deal with that external gap, but that's why you go break even. So 11 o'clock, inversion for rally gap on the 1 minute. Okay, let's check Javier's DM here. Alright, pulling it up. Whoop, did not mean to do that. Why is it so slow? What is going on? Alright, let's see this. Still loading. Still loading. Okay, I'm looking. 24,649. Oh, that's crazy. That's crazy. That was the exact same level as the RTH 0.25. Dang, bro. And how did you get this? It was the low. It was the low of an inside bar on what time frame? Is a low of the inside bar on probably like the hourly or the daily. I don't know. Let me know what time frame it was the low of the inside bar on. But we rejected the low of the inside bar. So the lows also work as resistance. Interesting. Thanks, Javier. So I thought we could only reject highs, but we can reject lows as well. We can reject. Blue is the high and red is the low. Oh, we rejected the high of the. Oh, we rejected the high of a 4-hour inside bar. Dang, bro. That's sick. Okay. That's actually really cool. Thanks, Javier. I get it now. I get it. So I also think just taking this as a change in state delivery is perfectly fine. I think that's actually an much easier entry in all honesty. And then you get a safer entry, yeah, I would take this as a change of state. I would definitely take this as a change of state because you get a much safer entry with way more obvious LRLR. Here, when you close here, it's like I'm like holding my breath because I don't know if this is gonna stay high resistant. But here I know, okay, I have this LRLR above me at least. So I actually like this change of state delivery a lot better actually. And I would just take that instead. I think this is way better. And yes, you can just take a change of state delivery without absolutely having a higher time from key level. Now, we do have a higher time from key level. Probably it's like a 5-minute gap, but that's besides the point, right? I could still take this if I have conviction in the draw and liquidity. I can just take this as a change of state delivery. I don't even need a higher time from key level. I've learned that through my backtesting. So, but it depends on the context and draw and liquidity and LRLR run, right? But this one is just super obvious. All this is LRLR. And then I would go break even at the end of the LRLR. I mean, you'd probably have lots of TPs within here, in all honesty. Maybe break even here. I like this. Break even here. Well, actually, you'd probably go break even midpoint of this ish. Yeah, let's just say break even here. It really doesn't matter that much. Like it's all decent. But yeah, this is a really nice trade. And if you have conviction in this LRLR, you could just go all off there. That's really nice. Bang. Once again, I don't need to take the 2022 model. I can wait for the 2022 model to clearly show it's being respected and then use it to get on side with the market. That's kind of more or less how I like trading 2022 models, is just making sure I'm aligned with it, not necessarily taking it. $10.57. 2022 model on the 1 minute. Oh, no. Change state delivery. 10.57. CSD on the 1 minute. And obviously, there was the trade of the day that I talked about, the first strike, the rejection of the first percent for value gap. That was so cool. I want to see how he true opens too. Oh, man, I could review the market for like so long. I don't know. There's always more to look at. It's crazy. Yeah, so at the time, this was high resistant, right? Do we want to look at that though? Anything else? Let's kind of just get rid of this now. I don't want to look at something else. I could look at this. We could have possibly thought to look for shorts off of the RTH 0.25. In all honesty, that definitely was a possibility, especially with probably a fair value gap within here. Then again, I don't know if there was SMT or anything like that. Yeah, once again, this is my version of implied fair value gaps, not ICTs. I do not care. So yeah, 5-minute implied gap and 30-second. Yeah, just like a little 30-second trade. RTH 0.25. I mean, if we had SMT, you could definitely consider taking something like this. And it's definitely Venom model on the 1 minute. Yeah. Wow, that is the most obvious Venom model I've ever seen, bro. Okay, we're gonna record this Venom model because this is just so stupidly obvious. Y'all see this, right? We don't even tap this Venom candle. Did we reject this as a New Day opening gap? I would not even be surprised. Oh, wait. Did we get an outside bar on the 32nd off of the RTH midpoint? Bro. No, that's the entry. Oh my. That is just so. Bro, that is so clean. And then we come down here. Like this. Actually, this is a CRT trade right here. I'd go like that. Take profit there. And then treat this as void. Yeah, so I'm honestly going to expand the Genesis model to include, like, if it's an outside bar off of, or in a CRT. So clean, bro. Oh my. What a cool trade. It's actually kind of a flow state too, because we aligned the 5-minute with the 32nd. We're delivering from this. And you could have stop loss here, honestly. It just depends on your conviction. I would probably put stop loss here, though. I just had an idea. I can just mark out outside bars and pin bars as just a minus sign or a plus sign. Okay, I really like this. Yeah, so 939 Genesis model. And this is more of an outside bar, but I'm now including outside bars in Genesis model, so. So why is this Genesis model? Because it's a CRT, right? It's a candle range, sweep of the high, close lower. I can tell we're going to go back down to the low. Genesis model on the 32nd. And then we'll also mark this out as an outside bar. Once again, the fact that it's delivering from this high confluence area, the 0.25 of the RTH, just makes it so good. It's really actually beautiful, actually. 939 outside bar on the 32nd. And then obviously you could have held it. That's really up to you, honestly. We have this inversion for value gap, this This is probably valid up to, yeah, it's valid up to the 0.25. At that point, just take profit. It's like this. I just go like this, sweep of that low. Then if we, with this inversion for value gap, it's good, but you don't need to go like super far. You can just go to this 0.25. And that is a very decent target. Oh man, we haven't even looked at new day opening gaps or new week opening gaps. I probably gotta go to bed though. Oh man, there's always so much to look at. Makes me go crazy. Like I never analyze everything. There's so much to look at. And then yeah, we inverse this like that, bang. And then we deliver up to this 0.25. And now it's just put the stop loss right there. This one would be more of like a scalpish type trade, and I would go break even. There's a volume bounce. I don't know. This is kind of tricky. Maybe I would just take profit here, but I don't know. Just kind of depends on conviction. This one's a higher probability break even trade because of that volume balance. Oh wait, right? Nah, we gotta mark this out. Hold up. This is 9:36, so we got a 369 time right here. So that's why I like the 369 stuff. It's pretty cool. All right. $9.36 inversion for value gap on the 32nd. Go ahead and save that. Yeah, I gotta get to bed soon, honestly. And honestly, let's also mark this one out as a flow state with an outside bar. Because it's delivering from this 0.25, we get this clear outside bar here. Yeah, this is flow state with an outside bar. Bang. Actually, let's mark it out like this. Bang. Let's project this out. Yeah, let's just go 4 projections. What a what a stupidly easy trade. Oh my gosh. It's crazy the power of just committing to a trade that you like. 4 projections right there. So yeah, flow state with an outside bar. So aligning a 5-minute with a 30-second outside bar. Hey, it's at 9:39 too. Another 369 time. Oh, number 22. I didn't mean to do that. No. I meant number 2. Oh my. Alright. And then this all was high resistant. Probably Phoenix model right here if I had to guess. This is probably Vol model. I'm curious. It probably was, but let me check. So 1052 is the 90-minute true open here. Oh, we do not have that. By the way, one thing I've learned about the 22-minute true opens is you actually do need to use the exact 22.5, not the 22. This is something I didn't realize until now, but it actually matters. I didn't think it did matter, but it does, because I was looking at this long here. And if you use 2230, you can see we actually do manipulate it. 922, we do not manipulate it. So I've been backtesting this a bit, and that is something that actually does matter that I didn't think did initially, but it does. So 92230. So this is our 90-minute true open. It's the most recent true open. Then we had a 730 true open as well here. 730. But that gets taken over there. So another one I want to see is the 22-minute true open. So whatever that was, 1013. It's actually gonna be 10, 12, 30. Right? Wait, let me get my calculator. Wait. Let me think. Let's just think about it. Wait, nah, this is kind of confusing. Wait, this needs to be 92230. Oh my gosh, yeah, it gets actually crazy precise. Wait. Hold on, this is actually really interesting. So 90-minute true opens are going to be at 2230. But if we split 90 minutes 5.625. .625. So that's eighths. What's 1/8 of a minute? $7.5. Why can I not add a custom interval for 7.5 seconds? That's annoying. Okay, it doesn't matter. We'll just use the 1 second. Wait, that doesn't work either. 9, so okay, 10:30. 10:30. Subtract 22 minutes and 30 seconds is 10:07:30. 10:07:30. And then add 5.625. 10, 12, 30 plus 0.625. So 10:13. 7.5. So it actually is around 10:13. Oh my. That's sick. And you can see where that gets manipulated. $1,010.14.05. Is it 10:14:05? I think it's 10:13:05. Or 10:13. 0. I think this is it, but I could be wrong. Someone's gonna have to do the math on it. But you can see how that is the exact top tick right there. So pretty crazy, right? And this actually aligns perfectly with, I think that with that 15-second change instead of delivery. Oh, this is just fun at this point. Trading is just so fun. What the? You have to admit, like, this is just so fun. Oh my gosh. And you can see how that was perfect right there. So, once again, we have the first percent for value gap here. Bang, right? So, rejecting, rejecting. And then you once again with a first point for value gap, you can align it with a 15-second change state or a 5-second. In this case, 15-second is pretty nice. And then where do you see the exact entry? Above both of our true opens, right? Now I tape read this 5-second one. I tape read this, but if you wanted to take the 15-second retest, that'd also be valid. Anyway, I took this 5-second closure, which actually gave me more RR. But 15-second retest, valid as well. And you can see that we actually perfectly soup the true opens. So, yeah, pretty cool. And then I project it out from the body to body of this order block here. Like this. And then I look 4 projections down. There you go. Right? 4 projections. Goes down pretty nicely, right? So, and it's using high resistance liquidity as a confluence because you can just see how this is just, people think it's low resistance, it's obviously not. And then yeah, we go lower. I mean, people think it's people think it's low resistance, it's not, and then we go lower. So this is my first strike model, and look at that, dude. I'm gonna have to calculate the true open sometime because I really need to figure it out, but anyway, it's all good. Could you imagine taking this? Like, people will lose their minds if I take trades like this. People will lose their minds. Alright, I should probably just go to bed. Oh, but I wanted to do a market recap. And then you can see how we take out equal highs here. Trading is just, when you get good enough at trading, I'm sure it's just a fun game. Like, the people who are the best in the world at trading, I'm sure it's just such a fun little game for them. Yeah, I know. I gotta get some sleep, bro. But I want to make the market recap. Yeah, sometimes you just gotta cut your losses. I think I should probably just go to bed. But yeah, you guys know that I did take this live. Like, this isn't hindsight. I took the 5-second change state delivery live. So it's like, it's not hindsight, guys. Alright. I know. Imagine. Imagine. Yeah, I'll just go to bed. I know I should probably make the market recap, but I don't know. That'd be on a day where I have more time, and I really don't, so it's okay. Hey, go away. Why are you here? Go away. Yeah, you too, man. Good night, bro. See ya. So yeah, 10:15. It's a 369 time too. Enjoy your sleep. Thank you, bro. You too. You too. 10:15. That is so cool. Look at the fact that we perfectly ticket in at 10:15, which is a digital root of 6. Okay, I know it's stupidly crazy, but like, but did this not happen? Did we not manipulate both time levels into this entry right at 10:15? Did we not? Because it looks like it did, right? So you can call me crazy all you want, but that's literally what happened. So it's kind of crazy actually. Okay. Anyway, 10:15 first strike. 1 minute, 15 second. Yeah. Anyway. Okay. Alright, I'm going to bed. I will see you guys tomorrow. Peace out.